here. It's been an interesting day, like Evan said, on some of the movement of them. I am keeping an eye on FNGU. FNGU already up 5% on the day. Curious what that does in Power Hour. And I want to start rotating around our panel a little bit, getting some thoughts from them on what they are looking at in the market right now. And I want to start out with yourself, Mish, and I appreciate all the patience. I know we've gone back and forth a lot this week.
Okay. Well, hello. This is not unexpected. We kind of talked about this, I think, the last time I was on Spaces, that all the risk factors were pointing to risk on, the ratios we like to look at. The key ones, of course, being how the S&P is performing versus the long bonds through the TLT, how the junk bonds are performing versus the long bonds. So that would be HYGB, TLT. And all of that was in good shapes by way outperforming the utilities. And so there were no real red flags in terms of the ratios coming into this week. And of course, the other thing that was sort of expected was that things got extended in the NASDAQ space with a lot of the AI type plays and the big tech stocks. And so it was time to rotate into things that were underperforming, but yet would be necessary if we were indeed getting some kind of a soft landing. And of course, that's the big question, which we can talk about. So here we are, right? Now we're seeing, the meme situation, the short squeeze on with Carvana. I just looked over at Beyond Meat, and I was shocked to find out that it's up 23.7%. But this is the kind of thing, and I think that you expect. And then the other, of course, real interesting thing here is that as much bad news there is about savings, credit card debt going up, and people being, living hand to mouth. And of course, that is a reality. There's the great divide between the classes. The actual earnings has been, household earnings have actually gone up. And so it's like retail spaces kind of figured out how to play this game while the institutional investors are still sitting there trying to figure out what the hell is going to happen with the economy. So, this has been a fun market if you are a trader and you understand how to follow what's hot. And I think a lot of you do. I've certainly listened to enough of you. And if you're more of an intermediate trend follower, it certainly has been fun. And the question is, after all the optimism of the last 6 months, cooling inflation, Fed not really going up after the rates on that same rate of change, and if they do raise, it's kind of coming to the end, the economy contracting enough, the labor market strong, but potentially right now a little bit on the iffy side with today's stats. What do we have to look forward to as the market is forward thinking for the next 6 months? And that's where your old wall of worry comes in, right? And so last thing I'm going to say, and we can come back, but I'd like to hear other people, is that I wrote an outlook in 2023, and it keeps sticking in my head because I said, I think that the Russell 2000 can go to 1900 while the SPX goes to 4400, and that'll be the top of the market because commodities will start picking up and the dollar could be under a little bit more threat. And here we are. So I am not necessarily saying keep buying. I'd like to see the risk factors change, but that sticks in my head. So I'm reluctant to follow the euphoria right now other than on a very short time frame.
Awesome way to start us off here, Mish. Appreciate the rundown. Yeah, Mish?
Well, a couple of things. I think there are two keys to really understanding when the party might be over. One is, again, as I mentioned, those ratios in the beginning, when we start to see anything get a little wonky. I mean, with the market being up, the yields came off today and the long bonds went up. And of course, gold, which has been slightly underperforming the S&P, the whole inflation thing would be the second thing. And of course, if you've looked at DBA today, that went skyrocketing. Yesterday, live cattle made a new high. Sugar totally reversed. Coffee was up over 5% today. We haven't really seen a big move yet in grains, but corn and wheat and soybeans definitely started to move up back into bullish territory. And so, there's always that point where everything goes up until the separation comes, and of course the dollar being the other factor, that's taken a big tumble today, and BRICS is still out there. But I also wanted to make a comment on the Iran supposed nuclear deal with the U.S. and the oil prices, because it was a knee-jerk reaction to liquidate oil, as if A, the deal was done, B, that would resolve the supply problems that we have with oil, and C, that OPEC Plus would reverse their stance, or that Iran would even go against what's happening in the Middle East in terms of oil. So the fact that it's popped back up to me means that that's another X factor still in the inflation narrative. Yeah, I mean, so these stories come out, but I think the ultimate story, and shows you how much people are so euphoric right now, is just look at Bitcoin. I mean, you couldn't have had more bad news in a space than we have seen this week with the SEC and Gensler and Binance and Coinbase, and yet Bitcoin really basically hasn't moved very much. It's kind of tested around the 25. It's back over 26. And so that just really kind of shows you right now that the environment is, let's take it all. Let's take it all. And that is always the most dangerous, right? Everybody got super negative at the lows, and now everybody's getting super positive when we still haven't cleared some key levels in the small caps. The retail's just catching up. Transportation's trying. And of course, the regional banks, they made a nice move and they're digesting it, but they're still not wowing anybody. And that divergence we have between what's happening in some of the hot areas versus the not so hot areas has come in. Rubber band, right? Busts, it comes back in. And now everything is getting stretched up while the commodities market's going up. And I didn't know about Newmont Mines halting for news, so I'll be very curious myself. Last thing I'm going to say is the Fed next week, they have a really tough choice because the labor statistics came out today a little bit softer than what they would like to see. We've had some bad stats with ISM, trade deficit. On the other hand, of course, they're looking at this market going up. And I think, not necessarily the most popular view, but I'm still going to stick with the fact that I think they say we're going to wait and see what happens as we get into this summer and not do any rate hikes next week, which could be perceived as very positive initially and then could be the cap at those resistance levels we're talking about as commodities continue to fly and the dollar goes down. Does that make sense?
Yeah, Mitch, I have a question based on what you said about Iran. I completely agree with pretty much every single thing you just said. The way I always saw this is because the Chinese are actually buying the Iranian crude for years. This is not even if they were to remove some of the sanctions where the Western countries could import some of the Iranian crude, the overall global supply wouldn't change on this news. So you're completely right. It was a knee-jerk reaction. You mentioned a lot of commodities, but I kind of want to hear what are your thoughts on orange juice?
Actually, I haven't really looked much at orange juice. I know it went skyrocketing recently, a couple of weeks ago, and I was kicking myself because I was looking at the chart going, oh, God, I kind of knew that was going to happen. So let me take a fresh look here because I can do that very quickly. That would be considered a soft commodity, right? And so if we're looking at the July contract of orange juice futures, that peaked out close to 300 and reversed and now is back down a little bit here. So, these people go, oh, that's it, the move is over, and it's possible that we saw this kind of big move. It would not be my first choice of where to go. It's very sensitive to environment, and right now it's kind of broken down from its highs. So if you want to take a look
I mean, if you look at a 20-year chart, it is substantially higher than...
Well, that's like everything. Look at sugar. I mean, to me, I love to look at sugar because sugar, even more than orange juice, is such a great barometer of everything. So sugar took a great correction. Actually, it was almost perfect. 10% correction from its top that it made a few weeks ago. Hit the 50-day moving average, tried to break it, came back through, and roared today, also up close to 5%. And yet, if you look at it from 2020, it's up from $5 cents a pound to 26 cents a pound. And it's kind of like that with all the commodities. So people are so short-sighted thinking that inflation resolves like because of a few hikes in interest rates. But just like the oil, like you just mentioned, there's so many supply problems, not to mention all the supply chain issues that could be on the table, that this whole super cycle in commodities, I think, is going to blow people out of the water when it comes back to haunt us. And the Fed will be like, ooh, I guess we have to raise some more to try to do demand destruction. And it's going to be very hard to do demand destruction in the goods that people need. At the same time, while we're having so much money pouring into the chip space and the EVs and, looking at Tesla, and, these things don't run without raw materials that are already squeezed in their supply.